Bitcoin is your savings account. And over time, when the price gets high enough, you'll take a little bit out, convert it to fiat to live your life until such time as 30, 40, 50 years, however many, when my Zoomer granddaughter, who's 1 today, is an adult, she will live in a world where maybe there are no fiats. There are no nation states. Now, the nation states are going to fight like hell to not have that happen, but it's certainly possible. And the thing about investing, the only way to really create wealth is to invest in something that...
With the highly anticipated Bitcoin halving event just around the corner on April 20th, 2024, investors and enthusiasts are on the edge of their seats, excitedly awaiting the possible spike in Bitcoin's price. Mark Yusko, the CEO of Morgan Creek Capital Management, is one of the seasoned professionals closely watching this event. Yusko explores the potential of Bitcoin in his most recent interview, providing his most recent price predictions. He claims that the introduction of Bitcoin ETFs and resulting flood of new investors have greatly increased the possibility for Bitcoin's development. In addition, Yusko believes that the impending halving event would cause Bitcoin's value to rise to previously unheard of heights, maybe even hitting the invisible $1 million per coin mark. Come along as we delve into snippets from the interview, in which Yusko offers his optimistic perspectives and in-depth evaluations. Stay tuned to the very end of the video as Yusko shares his in-depth post-halving pricing projections. So let's hear what he has to say next.
It's not DeFi, it's CeFi, centralized finance. But because there's a whole bunch of people like him, okay, I'm the second to last year of boomers. My wife's the last year, so 60 to 85 is the boomers. They aren't going to hold their own keys. They're not going to have a treasurer or a ledger. They're not going to be degen. They are, however, going to call their financial advisor that control trillion with a T, $30 trillion. And they're going to say 1%. I want 1% of this Bitcoin stuff. So that's $300 billion. Here's the crazy stat, Kelly. That's more money than has ever converted into Bitcoin. There's less than 300 billion that has been converted from fiat into orange coin to make the 1.3, $1.4 trillion of market cap we have today because of the multiplier effect. Bank of America says the multiplier is 118. Well, that's a historical artifact because, again, people bought it for 10 cents and it's now worth 70,000. That's not going to happen again. From here, the multiplier is probably more like 20. So for every dollar that gets converted to Bitcoin, the market cap will increase about 20. And that number will keep coming down so it's a moving target. But let's just use 20 for round numbers. So that 300 billion turns into 6 trillion. So we're at 1.3 today. That means we're at, call it 7 trillion, which is roughly equivalent to gold, the monetary value. Now there's the other part of gold that's jewelry and chalices. That doesn't count. The monetary value in the central bank vaults is about 6.5, 7 trillion. We'll round up to 7. So that means we're at gold equivalents. That means the price is somewhere in the $350,000 to $400,000 range. And again, people's minds start to melt. And then we go to Satoshis and it feels much better because it's not $400,000 per coin. It's point something dollars per Satoshi. So all of that's going to happen. But then you have the supply change. So the second part of the equation is 3 weeks from now, whether it's on 422, 421, or 420, everyone's rooting for different days. I wish it were Earth Day. That would be kind of, slap in the face to all the FUDsters. Yeah. But other people want 420 for other reasons. Whatever. Doesn't really matter. On one of those 3 days, it's going to happen that we have. So we go from 900 Bitcoin a day to 450 a day. Well, every day, 7,300 Bitcoin are snatched up. Well, there's only 900 produced, and we're about to go to 450. Where's the rest come from? Hodlers. Well, people say, I'll never sell. Yes, you will. Because
there'll always be somebody that will. Yeah.
But when do you sell your savings? Not every day. You don't use it to buy a cup of coffee. Your savings, you save. And every once in a while, you take a little bit out to pay tuition or vacation or start a business or whatever it is. Bitcoin is your savings account. And over time, when the price gets high enough, you'll take a little bit out, convert it to fiat to live your life until such time as 30, 40, 50 years, however many, when my Zoomer granddaughter, who's 1 today, is an adult, she will live in a world where maybe there are no fiats. There are no nation states. Now, the nation states are going to fight like hell to not have that happen, but it's certainly possible. And the thing about investing, the only way to really create wealth is to invest in something that you believe in before others understand. My pin tweet on Twitter. And when you do that, you have to imagine the unimaginable. And you have to be willing to be chided and teased and criticized and ostracized for your non-consensus action. And it's totally worth it. And so it doesn't mean you need to shift all of your wealth today, because we don't live on a Bitcoin standard. We still have to pay our bills in fiat. We still have to pay our rent in fiat. We still have to pay our mortgage in fiat. We have to pay our taxes in fiat. So we're going to have some balance. And over time, we will have systems where you can borrow against your Bitcoin, right? You borrow against your savings. People do that all the time in their brokerage accounts. They borrow against their stocks so they don't have to sell their appreciated assets and pay the tax. So all of these things, as we go from TradFi to CFI to DeFi, and whether we build it all on Bitcoin, right? Bitcoin, layer 1, safest, most secure network in the world. And L2s, we got more L2s. Lightning didn't quite cut it, but there are new L2s. They're looking pretty interesting. Maybe get L3s and L4s. But remember, all we're trying to do is replicate Visa, ACH, Fedwire, Gold. Once we replicate that, then we're in the digital age. And that's the cool end zone.
Before delving into Mark Yusko's perceptive forecasts on Bitcoin's upcoming halving, let us examine some recent updates and evaluations from a number of reliable sources in the cryptocurrency world. The oracle of cryptocurrency, Zia-ul-Haqq, is one well-known voice that has drawn attention from investors lately. According to ul-Haqq, there is a tendency worth noticing that may provide insight into the future direction of Bitcoin. ul-Haqq notes that, based on historical data, April usually sees an average 14.2% increase in Bitcoin following March's declines. Given its recent decline below the $70,000 threshold, this figure points to a possible comeback for Bitcoin. In addition, it is important to consider the remarkable outcomes of Bitcoin during the fiscal year 2024. Notably, at this time, Bitcoin had an astounding 115% increase. The U.S. Securities and Exchange Commission's SEC approval of Bitcoin ETFs, a major development for the cryptocurrency sector, is fueling the pace. In light of these advancements, anticipation for the next halving event in April 2024 is strong. In spite of the expected market swings that come with being in the cryptocurrency space, there remains hope for Bitcoin's April voyage. The signs of a possible pre-halving rally and the ability to hit new milestones are encouraging to both investors and analysts. Anxiety and hope are driving the market attitude as Bitcoin aficionados anxiously anticipate the next stage of the cryptocurrency's development. Let's go back to Mark Yusko's interview, where you will learn a lot about his analysis and forecasts after halving. Yusko will also provide his professional insight to the current Ethereum versus Bitcoin debate, which will further the conversation on the direction that cryptocurrencies are taking. Let's hear what he has to say.
On the halving, that fair value doubles. Now, I don't think it'll double this time because ordinals allow for transaction fees. So that'll lower the fair value probably to call it 80,000. We'll blow right through fair value again, and we'll go to probably double fair value this cycle. And at that point, investors will hedge or trim, and we'll wait for the inevitable next cycle to buy when it gets below fair value. So that fair value will keep accreting. We'll probably go to 150. Fair value will get to 100. We'll drop probably all the way down to 50 or something. People will be saying it's the end of the world. That's when you want to buy lots. But for me, it's why the top of my Twitter page just says, just buy it. So I'll leave it at this. So I'm going to do CNBC tonight at 5 o'clock. And in 2018, I was on the same show with Melissa Lee. And while I was on the show, I'm only on for like 6 minutes, but while I was on the show, the price went from 10,000 to 8,000. Like it fell 20% in 6 minutes. And people were like, oh my God, what should we do? I buy it.
Buy.
Oh, you'd always say that. Like, yeah, I would. Buy it today, buy it tomorrow, buy it next week, buy it next week. Don't buy it all at once, but accumulate over time an amount of ownership of the most powerful computing network the world has ever seen, and you'll be happy. Ethereum has a larger installed base. There's more developer activity. There's more quality developer activity. That doesn't mean the Bitcoin developers are less quality. Some of them are more high quality, but there's a lot of quality development going on in Ethereum. So I won't even compare the two, but there's a lot of quality in Ethereum, and Joe Lubin and that crowd is very tight with Wall Street. So there's probably an inside track there. That said, those of us in the institutional world look at Bitcoin and understand that it is the most secure network the world has ever seen. It is where I do believe all things of value will eventually settle to that chain. The Mona Lisa will settle to that chain. My PFP is going to settle to that chain. Things of value, and mine's not as valuable as the Mona Lisa, but my point is, anything that you think has value, you're going to want to settle to the most secure chain.
Yeah.
The problem with ETH is you're not settling on chain. You're settling to a pointer to an AWS server somewhere that can be taken away from you. I don't like that. I want to settle on chain. And as the world moves on chain, what's been missing to date was a scalable way to do DeFi on Bitcoin. With stacks and other innovations, maybe we're getting closer. There's last count 20 new layer 2s and 40 more in development. One L3, we need more. But as those layers get created, if you're given a choice, the Lord of the Rings model, which is one chain to rule all chains.
Yeah.
I'm a proof of work guy. Without proof of work, you mentioned it, right? I believe everything in life, from what you and I are doing right now, we fueled our bodies. We're converting energy to value. Hopefully people find this valuable. Everything where you build buildings or, build skyscrapers or, make sure planes fly. Everything you do all day is converting energy to value. Most of it with fossil fuels. And we convert that energy because energy can't be destroyed. You can only change its form. Heat energy becomes light energy, right? It doesn't go away. It just becomes something different. So we can take that heat energy, turn it into a turbine, and then store it as value on a blockchain that's secured by a decentralized network. So it needs the proof of work, the proof of converting that energy to value to be of value. If you can just have a big stack and you can change the consensus, that feels less good to me.
Yeah.
But that's just a personal thing. So that's a long-winded way of saying, I think DeFi on Bitcoin has a very bright future. We're investing. I love ordinals personally. I just think it's amazingly cool because you go back in time and you say, well, there's space on these blocks. We could fill it up and have secure, actual on-chain inscriptions as opposed to pointers to AWS.
In his investigation of Bitcoin's halving event, Mark Yusko offers an intriguing viewpoint on the cryptocurrency's fair valuation and future course. According to Yusko, the fair value of Bitcoin has traditionally doubled with each halving. The doubling may not happen this time, he notes, because of transaction costs, which would probably reduce the fair value to about $880,000. Yusko thinks that Bitcoin will surpass its fair value and perhaps double its fair value throughout this cycle despite this modification. He believes that at this time, investors could hedge or reduce their holdings in anticipation of buying back in the following cycle when the price drops to a reasonable value. Fair worth, according to Yusko, will rise gradually and may eventually reach $150,000 before falling to about $100,000. He says that these market declines are a good opportunity to amass Bitcoin, which is displayed on his Twitter page. Just buy it. Yusko also remembers a pivotal occasion from 2018 that happened on CNBC, when the price of Bitcoin dropped by 20% in a matter of minutes. Even if people were terrified, Yusko reiterated his plan to eventually acquire Bitcoin while highlighting its position as the world's strongest computer network. Yusko then compares Ethereum with Bitcoin, pointing out that Ethereum has a bigger installed base and more active developer community. He He does, however, maintain that Bitcoin is still the most secure network and that everything valuable will ultimately find a home on its chain. While voicing misgivings about settling decentralized servers, he emphasizes the significance of settling transactions on-chain. Yusko is optimistic about the future of decentralized finance, DeFi, on Bitcoin, particularly in light of the rise of Layer 2 solutions like Stacks. He thinks that the security and worth of the Bitcoin network depend on the proof-of-work consensus method. Yusko sees a great future for DeFi on Bitcoin, which gives him an optimistic view. Finally, Yusko's observations provide a thorough analysis of Bitcoin's possible future course, highlighting the cryptocurrency's long-term value proposition and durability in the face of market and technical changes.